Hi guys, welcome to SavvyMoneyShow. Me, your host Sean. Well, Palantir's gone down. ARK Invest, Cathy Woods is sold out of her Palantir shares. I told you so. I said I'm selling my shares. Cathy started selling her shares. It's time to sell your shares. I'm just kidding. Now, she sold 1 million shares. And look at the overreaction here. Say overreaction? A bit like the overreaction to me saying I'm selling my shares. But I had people calling me moron, an idiot. Well, you know, I was up 40% on my investment, and I have remember I got in during the dip on the IPO. I sold at 40 and then I got back in on the dip at 15. Now the thing is, it's like with Cathy Woods, she sold 1 million shares, but she still has 20.8 million shares. It's more rebalancing rather than a panic sell. And I think people have overreacted. Now, I would like your opinions on this. It's a bit like when people overreacted to mine. I took out my initial investment and I'm riding 3 shares. She is determined to keep her position in this under 2%, and that's what she's doing. It was under 2% when she went in, and she's still keeping it under 2%. Now, as I said in my previous video, it will take about 3 years at the current rate for it to become profitable. There's lots of good news coming out about it. I do not suggest selling out of your whole position. I also said, instead of doing what I usually do, which is split the profit between cash and free shares, I just held all my profit in free shares. You can do whatever you decide to do, but please do your own due diligence and don't just listen to an idiot on the internet like me. Don't forget to hit that lovely like button, and don't forget the sexy subscribe button. A lot sexier than me, just ask the wife. And if you want to be a hero, hit the bell notification. You'll be notified when a new video gets uploaded. And why not check out the links in the description below. If you're looking for a free trading platform, you get a free share worth up to $200, depending on the platform you use if you deposit a small amount. Now, we've spoken about how officials have traded to benefit from the infrastructure bill, how they have actually, how lobbying has changed the bill to impact their investments, and what's going on here. And I've put this in my Discord. You will also see this on Twitter. I will go through some of the companies with you now. These are not buys or sells. They are more speaking about ones that have risk and reward to them, even if there wasn't a bill. You can see with Mresco, it's a $1 billion revenue company, and you can see here as of December, its assets were 1.7 billion against liabilities of 1.25 billion. You can see the assets went up to 1.85 billion. The liabilities come down to 1.2 billion, which means they've increased the assets, but liabilities have gone down, which is good to hear. Now, the other thing is, it's a 3.3 billion market cap versus enterprise value of 4.13 billion. Price to sales of 3, which isn't great, but isn't bad either. Price to book is a little high, 5.26. but then again, you do have quite a lot of money on free cash flow, but it has kind of increased share structure because of that. Now it has picked up a contract with Cannon Air Force Base to improve all their clean energy, such as air conditioning and all that. It's a $90 million contract, and I think it will pick up in the infrastructure bill. It will pick up a lot more. Right, we have Powered Brands. Oh, sorry, that's for another one. Sorry, Ideal Power. I apologise for that. Ticker symbol IPWR. Now, on the face of it, doesn't look very good. It's a switching company, and okay, it's a speculative company. It's collaborated with Diversified Technologies. Now, you think to yourself, well, wouldn't I go into CleanSpark, which is a better switching company, and also has the crypto? It's around the same price. Well, because officials are going into this around the same time. On the face of it, it looks overvalued. Market cap 76 million versus enterprise value of 49.7 million. Price to sales 114, which is way out there. Price to book 2.78, which isn't too bad. Right, this is where we get to the nitty gritty. It's losing money. Not a massive amount, but it is losing money. Now we see all along there, its assets. 3 years ago it was 13 million, then it went down to 6 million, and then it stayed around the 5 million mark. While the liabilities have been just over $1 million mark. So it's just been staying afloat. But then we go to this quarter, all of a sudden the assets jump up to 29 million. The liabilities creep up to 1.6 million, which make you think they have a huge contract, and they haven't announced. Makes you think that they're picking up contracts. Now, I haven't studied this fully, but you can see here it hit. It hit 22, has a price target of 25. You know, it did hit 25 at one point, but only for a second. And that is why you're getting them in. Now this is one I do like, Jacobs Engineering Group. Now you will see it is, yes, it's increasing, but the liabilities are increasing as well. But you have last September assets of 12.3 billion against liabilities of 6.5 million. And the assets and the liabilities have gone up by 3 billion. So there's not really much to be said about that, and it's not really, on the face of it, looking great. But its market cap is 17.5 billion against the enterprise of 21.1 billion. It's not profitable at the moment, as you can see, but it has a forward PE of 19. And for a growth company to have a forward PE under 20 is good. 15's better, but once it gets profitable, you can expect this to take off. Has price to sales of 1.28, which is good. Just over 1 is good. It doesn't have a price to book, unfortunately, but I think this would be a good speculative one, because you look at the chart, it's looking good. It's not going up too sharp, it's not going sideways or down. It's a good chart. They're paying a dividend, and I don't know why they are if they're not profitable, but it's only 0.63%, so it's not even worth worrying about. They have got a contract to develop smart city master plans for 3 greenfield industrial sites. I think it's one to look into further. We have First Solar. Now, you can see here the assets are 7.1 billion against 1.5 billion, and this quarter the assets have stayed the same, and they brought liabilities down by 100 million. So instead of concentrating on growing assets, they concentrated on bringing down liabilities, which I like, but you still got to do the business. The cash flow isn't great. It's okay. They've got good enough cash flow to operate, but they need to keep an eye on that. The market cap is above enterprise value, and the forward PE is going to rise, which means they're not going to grow. It means they're going to shrink the next year, and their price to sales is 3.21, which isn't too bad, but it's not great either. Price to book is 1.68, which is good, but I'd be worried about them doing something like dilution or something cropping up. But if you look at Motley Fool, now he seems to think First Solar is cheap. Now you have to decide. Now it does have cash on its balance sheet, but the problem is Motley Fool is talking about returning, whether it uses it for growth or returning cash to shareholders. It can't afford, in my opinion, to start returning that cash to shareholders, otherwise it will not grow. Right. Freeport Mason. Now I like this one as well. This is a good one. Zax has it as a strong buy. I suggest you read that when you get a chance. Again, a dividend which you will qualify for if you pick it up soon, and it's not incredibly expensive. Market cap 54 billion against the 72 billion enterprise value. Now its PE is 30, but a forward PE they expect to be 10. Now that is a huge jump if that's correct. Price to sales 3.35, which is average. Price to book 4.97, which is a little on the high side. Now you can see the assets are 42 billion against 23.5 billion, and you can see that they've both gone up about $500 million. And they have a free cash flow though of 2.4 billion, which is good, because if you have to, if they suddenly come out and raise the rates, you don't want to be paying off a lot of money in interest, so at least they can cut some of those liabilities. Now we're going on to Recon Africa. Now this is a good one. This is one of my best, in my opinion. A guy is a well-known geologist, the best geologist there is, and he's gone and drilled where they said you wouldn't find anything. Kinder Morgan. Now it has a 5.92% dividend, which shouldn't be sniffed at. The earnings are this month, and you have a 41 billion market cap against a 74 billion. Forward PE is 20, so it's just around that spot. Price to sales of 3, price to book of 1.3. Now if oil does go up to 100, this is a company that will do well. Now this was also in my dividend stock to get a dividend a day. I do think this should be in most people's stock. Now NextEra Energy, we can see it's a 2% dividend, which you've just missed. You've got a $145 billion company against the 205 billion enterprise value. Forward PE of 27, price to sales of 8.5, price to book of 3.89. So it doesn't look very good on the face of things. And then you see 177 billion against 82 billion. And then in the last 3 months, you see they've increased the assets by 5 billion and the liabilities is only by 4 billion. So that's good to see. And of course Desktop Metal, you know, that's going down, and I'll speak about that another time. And we have Norfolk Southern Corporation. Now that's another oil company. And I think, why would you go in it when you have the others? But you may fancy it. Has a 67 billion market cap against 78.5 billion enterprise value, and it's going from a 30 PE to a 20 PE. So you might have a scanner pulling that out for you. Revenue was 9.8 billion, but you had to pay 6 billion for that. So you've got like 3.8 billion. The assets were 38 billion against 23 billion, and then you see they haven't really changed much. But it's as I said, it's not my favourite one, but you might get someone who likes it because the graph is just steadily up, and some people like it for that reason, because it kind of mimics Facebook. Anyway, I hope you've enjoyed today. Don't forget to hit the like button, comment in the box below, and subscribe. Hope you enjoy your 4th of July, and I'll see you in the next video. That's all for now.